so many awesome upsides. I just love this asset class. I think everyone should have at least some of it in their portfolio. This is the slide that was a result of me losing pretty much everything in 2008. Because for those of you that lived through 2008, you remember that when the markets were just tanking and all of these credit default swaps were going into foreclosure and there's a for sale sign on every other house in every market in the country, the government came out with new loan programs, very aggressive loan programs for first-time home buyers, second-time home buyers, but anybody who fell below what's called the FHA cap. So in every county in America, roughly 3,300 counties, there's a separate FHA cap, which represents 80% of the buyer pool in that given market. And so when markets fluctuate and we see what we saw in 2008, the federal government is always going to throw money at FHA, VA, USDA, Fannie and Freddie. And they're going to make money available to people who want to buy a house to live in under the FHA cap. And so because of that, we set our entire underwriting criteria, and the only types of loans we will write and the only types of properties we will lend on are the ones that fit in this box. Residential 1 to 4 units, non-owner occupied, smaller than 2,800 square feet, smaller than 5 bedrooms, 3 baths, with less than a half of an acre of ground. So we don't end up with some 50-acre piece out in the middle of nowhere. We want these to be in relatively, large cities, 20,000 population or more. We want it to be close to a major airport. All of these things, we want to see income growth. We want to see population growth going on in these markets. But as long as the deal fits in this box, we can pretty much fund anything. And we do lend nationwide, which means we have notes all over the country. One of our recommendations to our investors is, hey, why don't you just buy a note in your own backyard? Because you can drive by it, look at it, see how the investor is managing the project. But this has saved us. So this little box has been our guiding truth since 2009, when we went, okay, we just lost everything. We got to rebuild, but we need to do this smarter. And so we're going to build a asset class that is protected by the federal government because, unfortunately for us, we were not too big to fail. So we said, okay, well, how do we set this up so that as markets shift, that us, our investors, our clients are going to be protected? And this is the one that does it. One of the jokes I often like to tell is, what do you call a private money lender in a recessionary downturn? What do you call a private money lender in a recessionary downturn? And the answer is landlord, right? Because as a private money lender, if we lend money to somebody that'll pay us back, we foreclose on the asset, and now we have a choice. We can sell it, but if the market isn't conducive to selling, right? It's soft, interest rates are high, we can just put a tenant in there and we could create cash flow waiting for the market to rebound. So either we're getting cash flow through the monthly payments by holding the note, or we're getting cash flow by owning the property and collecting the rents. So it really, really flattens the risk profile and gives you really consistent returns. And most of our loans, guys, are written between 9 and 14% interest. The average loan is about 11%. So imagine adding, $1 million of 11% returns, consistent returns to your portfolio. That's $110,000 a year, secured against real property, insured against loss. So many awesome upsides. I just love this asset class. I think everyone should have at least some of it in their portfolio. As you guys know, single-family residential assets that is always in demand. People are always going to need a place to live. People all want the American dream. They want to own their own home. And because of that, we see a lot less volatility in the markets. And that's our goal. That's what we want to accomplish.